Welcome all. Welcome to Financial Freedom. My name is Samir Bapat, and today we are at session 5 of 12 sessions. So we are going to learn one very new, exciting topic today. What we are going to learn today is one is the money management for investing. I'll be giving you some tips how you can manage. This is one of the tips, right? So it is not something sacrosanct, but definitely it will help you in managing your money in stock market in a very positive way. Then risk management, and then we are going to cover a very simple and powerful investing strategy. So if you all are ready to learn, can I have yes from all of you? Please type yes if you are ready to learn. Great and very simple, but very, very powerful technique today. Yes, okay, great, thank you. So let's begin. Now, money management. So let's start with money management. See, what happens is why money management is very important, because people don't plan from the point of view of money, or most of the speakers will not be speaking in terms of money, how you should be investing, how much you should be investing and all. So this slide is very, very important. Please note down at the end of the slide, take a snapshot if you want, or write down later. This is very important. If you follow this also, you will be having a decent investment plan for yourself. So first of all, whenever you are entering into stock market, you have to decide how much money you are going to invest this year in stocks. So let's assume for the sake of discussion that we are going to invest 10 lakh rupees in stock market, and we are going to buy shares worth 10 lakh rupees. Okay, done. Then 5% of that capital is 50,000 rupees. So whichever capital, if you are investing 1 lakh rupees in this year for stock market, don't increase or decrease it abruptly. Just decide, okay, this year I'll be investing 1 lakh rupees, 5 lakh rupees, or 10 lakh rupees. Let's assume you have decided 10 lakh rupees. So find out what is the 5% of 10 lakh rupees, which is 50,000 rupees. Okay, chalo, 5% aa gaya. Now, for any stock, if you're buying a stock, you will trade only one trade in one day, because I'm talking little bit long term. It's not long term of a long term 5 years. I'm saying we are going to buy and hold the share for some amount of time, at least 3 months, 6 months, 1 year, something like that, as long as it is not giving us an exit signal. Okay, so that's why any given day you will buy all the shares, but you will not trade more than one time in one trade in one day. One trade maximum amount allowed in one stock is 5% of your capital. So if I have a 10 lakh rupees, which I want to invest in stocks, so one stock, one trade, not more than 50,000 rupees. That's it. ऐसा नहीं कि today I am feeling very happy, I am feeling very lucky, I'll put 10% of my capital, or I am very excited that I got this tip and this is a lifetime tip and I'll invest 15%, 1.5 lakh rupees, 2 lakh rupees. No, you have to be very, very organized, disciplined when you are investing, because we are betting something on future, right? We don't know the future, we are betting something on the future. So invest 5% amount allowed and in any one trade. So you will still have 95% in your pocket. So one share, 5%, one trade. Maximum capital in any stock should not be more than 15% of your entire capital. So if your capital for this year for stock market is 10 lakh rupees, then any one share should not have more than 1.5 lakh rupees of investment. Don't invest 2 lakh rupees, 3 lakh rupees, or 20%, 30%, cap it. Once 50% is done, stop. No more investment in that stock. Whatever, even if Ratan Tata comes and tells you, nahi, this stock is going to go up, invest. Nahi, bolna, I will invest only 15% of my entire capital in this stock. Finally, this is very, very important. Maximum to maximum, you should have 10 stocks in your portfolio in a year. I have seen people, I come across a lot of people. Okay, before I tell you this, how many of you have seen the movie Ghazni? It came in Hindi, Amir Khan acted in it. It was made in Tamil, I think, earlier, and then it was made in Hindi, acted by Amir Khan. I saw Amir Khan movie. How many of you have seen Ghazni movie Ghazni by Amir Khan? Can I have yes? If you have seen, heard, yes? Yes? Okay. So, the last point is very important. Loss of memory, right? Excellent. So Gopala is saying loss of memory. That fellow has a loss of memory and very acute loss of memory. So what happens is, I have seen people, many people, that they will have 50 stocks in their portfolio. They will have some 30 stocks in their portfolio. They will open their portfolio and they're holding some 30 stocks, 50 stocks like that. And then they look at the stock and then they scratch their head like this. And then they ask, ये स्टॉक मेरे पोर्टफोलियो में कैसे आया? Like Ghazni, no, they will think, ये स्टॉक मेरे पोर्टफोलियो में कैसे आया? They don't know, they don't remember why they bought the share, what was the objective behind it, why at all they are holding, but they will have 50 shares. No clue why it is there. So don't become a Ghazni. Have 10 stocks in your portfolio, max to max, and you should be knowing कि ये stock मेरे portfolio में क्यों आया, मैंने क्यों लिया है, what is my objective and why I have bought this stock. So this portion is very, very important. If you follow these rules of investment, I can assure you it will be very difficult for you to lose money in stock market, because money management is the first step of investing in stock market. You have to manage your position sizing, how much you'll invest, in how many stocks you'll invest. If you want the 11th stock, if you're liking 11th stock, first eliminate one of the 10 stocks which you don't like, and you are liking some 11th stock which has become more attractive. Just sell off one stock, then invest in the 11th stock. ऐसा नहीं कि you are putting one after another 50 stocks. Okay, how many of you have seen people around you or experienced around you who are going through this phase of Ghazni? They are having some 40-50 stocks and they are not able to remember why they have bought that. Now, I'm not even saying long term or short term. I'm saying 10 stocks. Bus. Immaterial, long term, short term. There is nothing, as per me, there is nothing called long term, short term. As long as company is performing as per my analysis, I will stay invested. Now, if maybe company decides not to go the way I think it should be going, I will come out after 1 year. If the company is 1 year, 5 year, 10 years, they are doing as projected, we stay invested. So there is nothing called long term, short term. I stay invested in a company as long as it is sticking to its objective of business, to its expansion plan. Right. So there is nothing, as per me, there is nothing called long term, short term. So any investment in stock market, you should not have short term, long term. You should not have more than 10 stocks. Fine. Everyone okay? Everyone good? So far, so good? Yes, no? Okay. Have you seen people with more than 10 stock investment and they don't remember why they have invested in that? Okay, so one person said yes, others. Okay, so as you'll progress, you'll meet a lot of people who are in that stage and they might not have done this thing, right? Okay, so trading plan. Okay, no, so before we go to trading plan, because this trading plan, whatever trading plan, simple, very simple trading plan, yet very powerful, I'm going to share. But the basic requirement of this, the basic requirement of this trading plan is you have to select a fundamentally good stock and with a good future prospects. So what is the acid test for that? Whenever you are buying a share for using this strategy on that share, you should have a convincing answer. That convincing answer should be, first, you should be aware, you should be knowing why this company earned profit for last 3 years. See, you will get data. You will get very data. This company has been growing with CAGR of 20%, profit 20% year over year. Good. That is data. But you should know why it made profit for last 3 years, 20% year over year. Very few people go and investigate that. Because once you understand why this company has made profit year over year for last 3 years, then only you will be able to understand why it will be profitable for next 3 years. If you don't know why it was profitable for last 3 years, you will never understand why it will be profitable for next 3 years. This is where people, second point, where lose money. They will go put some filters, screeners, blah, 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 20% year over year growth, sales growth, profit growth, blah, blah, blah. Very good. But why? Why they grew by 20%? No, I don't know. Someone told me it is a very good company. TV, I heard it's a very good company. CAGR, fantastic, low PE, high profitability, blah, blah, blah. But why? Nobody knows. If you don't know that why, you will not know why they will be growing in the future. So both questions very, very important. So if you are investing in any stock, answer this question. If not, don't invest in stock. It is better to keep money in your own pocket and don't invest in stock market. First get this answer and then invest. We will be holding one session, fundamental analysis, where I'll teach you how to look at things for analyzing this, but remember this. Okay, so I have covered. Okay, great. Now let's go ahead. Now let's move towards trading plan. So before I go to trading plan, we are moving into zone of indicators. I have already covered the candlestick patterns, the basic price movement and everything, charts and all trading view. I have shared the previous videos also. So now we are moving towards the indicators. Before we move towards indicator, I want to just tell you, because once I'm assuming everyone is beginner, they will go and have a look at indicators. Yes. But as you become more and more proficient in stock market, the best thing is to be able to trade without indicator. With only price action, you should be able to trade. That should be your achievement. Indicators are only to assist you. They are not handed over to us by God. God has not given ki yellow moving average, yellow RSI or MACD or ADX. They are man-made. They were made to give us an indication what is likely to happen. They are not fault proof. Please always remember, no indicator is perfect. Okay. Indicator is indicator. It will only indicate that it is likely to happen. So don't love indicator. Don't start putting lot of indicators की moving average भी लगा दिया, RSI भी लगा दिया, MACD भी लगा दिया, ADX भी लगा दिया, and then you will see okay RSI हो गया, MACD हो गया, ADX हो गया, अब मैं trade लेता हूँ. By that time trade will be over. Okay. So if you put lot of indicator, if you have on your screen, if you have more than 2 indicators, right? Then believe me, you don't know what you are doing. Or people who are having more than 2 to 3 indicators, it is called death by indicators. So don't go for one indicator above other indicator. Learn 1 or 2 indicators and trade. Okay. Why I'm telling is most of you are beginners, you will fall into that trap, right? This I have gone through this entire cycle. I started with indicator. I fell into the trap of lot of indicators, death by indicator, again gave away all the indicators, came to one indicator, which I am using. So don't fall into a lot of indicators. So you should not have a lot of stocks. You should know what your stocks are doing. Third is you should not have a lot of indicators also to trade. These are few like guidelines for the beginners, and you will remember me one day when you will go through the cycle. I know many of you will not listen to me. You will have 5 indicators someday on your screen. You will have your like I had my heart broken, frustrated, then you will remove all the indicators, remember this day and come back to that. So that is a learning cycle. Everyone goes through that. So don't worry about it. Okay, so given पूरा एक lecture हो गया है, एक background हो गया है. I hope everyone is clear about the money management and about the indicators and all. What is the indicator stands for and all. Can I have yes? Yes, should we move the first simplest indicator? So I'm assuming everyone is beginner. So I'm starting with the simplest indicator, which is a moving average. Okay, now moving averages, it is moving average. Average, we know everything. It is very simple. If you want to find average of 5 things, we just add 5 numbers divided by 5, and whatever average we get, that is a moving average. Same thing in stock market. It takes the closing price of all days, adds it up, divides by those number of days, whatever number of days we take, and it will plot the line for us. So as simple as that. Now, today I am recommending you to try out with a moving average of 249 days, 66 days, and 22 days. The most prevalent moving averages in stock market are 20-day moving average, 50-day moving average, and 200-day moving average. Now you might think, यार ये कुछ special है क्या? Is he giving something special? 22 days, 66 days, and 249 days. Nothing special about it. You have to understand one thing: 20, 50, and 200 simple moving averages were used some 100 years ago when there was no easy accessibility to calculators. Also, people had to do calculations manually. So it was always easy for them to calculate in terms of in multiples of 10, 20, 50, 100, 200. That's why they developed this indicator of, I think 100 years back, there was no calculator easily accessible to people. So they had to do manual things. So they will have 10 days moving average. So 10 days divided by 10, easier to calculate. 20 days, easier to calculate. 200, easier to calculate. Hence, legacy wise, most popular indicators moving averages is 20, 50, and 200. Now we have calculator and computer, so you can either use 20, 50, and 200, same principle will be using, or you can use 22. Why 22? 30 days calendar month, 8 days Saturday, Sunday, so 22 days. So 1 month, 22 days, average of 22 days, whatever you get, that is a monthly, you can say the direction of the market. 66 is a quarterly results we have every 3 months. So 66 working days. So 22 into 366, 249 is 365 minus 104 is holidays, plus 12, whatever is left is 249, 250. So this will be more closer to the actual number of working days which we have in the market. So you can use 249, 66, and 22. No magic or something behind that. I'm taking the average of working days, and that's all we are going to use. If you are not comfortable, people are not discussing around you with these numbers, you can as well use 20, 50, and 200. That is also perfectly fine. So we'll be using, for example, today we'll be using 249, 66 and 22 for the discussion. Now trading plan. First of all, I'll take you through the trading plan theoretically, and then I'll show you on the practical side of it also. So preferably moving average should be flat or pointing up. Okay. Entry, buy when price crosses above the moving average. Okay. When it is crossing above the moving average, how much capital you should put? 5% of your entire capital. If your 10 lakh is the capital, then 50,000 you have to put, not more than that. If closes below most recent V shape, I'll explain what is a V shape. Exit one exclusion. If there are immediate V shapes after the first V shape, the stock is in whipsaw mode. Keep exit below the first only and shift only if it is a if it has moved consistently little bit up. This is little subjective. This is not a precision. Some engineers might not be happy with me. They look for some precision trading. Sorry. This is not a precision trading. You have to have art and science also mixed with you. And next entry above the next moving average only. So this is the trading plan. I'll explain you step by step. Start with 249 or 1666 SMA, whichever is lower. If you want to take a snapshot, you can take a snapshot, or you can see the video later and note it down. Okay. Or I'll bring it again later, this thing. Okay. Now, just give me 1 second. Okay. So okay, so let's go here. I have brought in, this is the chart for Triveni engineering. So you will ask me, acha Triveni engineering kyun? Hai na? So first, do I have that rule that whether why it has made profit for last 3 years and why it is going to make profit for next 3 years? Yes, I have that answer, because government is mixing ethanol in diesel and petrol. The target is 20% mixture, which has to be achieved, that petrol and diesel 20%, it has to be mixed. Like ethanol, biofuel has to be mixed with ethanol, and then so that we have a reduced burden of buying crude from outside. Right now, the production capacity in India is 8%, requirement is 20%. There is a possibility of growth of 3 times with the current capacity itself. If the government is pushing for 20% blend, then we still have a room of 3 times growth for this industry. Triveni engineering is in ethanol production. So I have answered why it is going to grow in coming 3 years. Okay. So I fulfilled my first criteria. Second criteria is I'll put a indicator on this. Let's say moving average. Okay, so you go, okay, those who are new, I'll just go slow so that you don't feel ye kya ho gaya. Okay, so this is the candlestick chart. Let me go to the indicator. Press the indicator, you will get this beautiful screen. Type moving average. Okay, so you have moving average. Click on moving average. You will have indicator on your screen. I think free version will allow you 3 indicators at a time, or 2. Even 2 is good enough. Let's change. Go to the settings. Input. Let's change the length to 249. Okay, done. Then let's style. Let's make it little thick, because I have specs and still I want to see it very clearly. Let me make it dark green. Okay. Now, okay. So this is the, what is SMA in this MA chart? Yeah, it's a moving average chart. So what we have, this is simple moving average line. So it is nothing but calculation of moving average of 249 days, all the closing price divided by closing price of 249 days divided by 249. So we have 249 days moving average. So the trading plan is simple. Okay, so let's zoom in. Now, the trading plan is if the price closes above the moving average. So step number one, the price has closed above the moving average. So this is where it has closed above this 249 days moving average. Everyone okay? This part? Yes, no? This is the moving average, green. It has closed above the moving average. Okay. One. Second, the moving average is almost flat. This is subjective, but you have to see the moving average is almost flat. See, we should avoid, okay, I'll show in the other moving average, this will remain the flat, remain mostly, it will remain flat. So we have purchased it here. So let's say if it is crossing at this point, we have purchased here. Now, I'll just cut for making it more better visible. Okay. Now this is what we are seeing. We are seeing it has closed above the moving average. We purchased here, for example. Now, if we go, now this is not a very clear cut V shape. Okay, I said, okay, put your stop loss near the recent V shape. Okay. Yeah, so 249 is almost flat at any time. So whenever it crosses 249, you can buy. How much amount we will buy? We will buy for 5% of our total capital. So we bought this went up. We bought for 5% of our capital. Looking back, this is not exactly perfect V shape, but let's say, yeah, okay, V shape. You will have to give me some leeway. Think that this is something called, like, it has gone down, it has gone here, and again it has gone up. So this is sort of V shape which you have to think. As we will go in this class with other moving averages, you will understand this is how this V shape will look. You have to take that judgment. So we have entered here. Looking back, this is the latest V shape. Draw a horizontal line here. Okay. Now, why we are drawing a horizontal line here is because this is our stop loss. Please remember, in stock market trading, when you are buying, right, you should be ready to exit with loss. Whether you are buying for a short term, whether you have a long term or long term investment, you should always have an exit plan before you enter. This is a what we say, this is a moon mantra. This is a root mantra. You have to remember, you should be ready to exit any trade with a loss. That is point number one. Second, point number two, before you put your money, even a single rupee in any trading, you should have your exit plan ready. How I will exit in profit, how I will exit in loss, what point I'll exit. It should be very clear in your mind. If after entering in the trade, after putting your money in the stock, if you are thinking how I will exit, nahi hoga. You will not be able to make money in stock market. Take it in writing from me. When you are entering into trade, before putting a single rupee in that trade, you should be very clear how I will exit. So once it has crossed this 249-day moving average, yes, I'm going to buy. How I will exit? If it goes down below this line and if it closes below this line, I am going to exit. Agar loss hota hai to hone do. Everyone okay? So far so good. Everyone okay? Can I have yes from all of you? Very, very important. You should have a exit plan before you put a single rupee in the stock. Okay. Majority people think how they are going to exit. Even they don't know how they are going to exit after they put money in the stock. So they will buy the share, and then the Ghazni part two comes. How am I going to exit this share? When I am going to exit the share, they start scratching their head. Literally, they will start scratching like this. How will I get out of this share? No, no, boss, you should know when you will get out of this share. Okay, fine. Okay, so Piyush is saying most of the time we wait for a pullback. See, there are a lot of different trading strategy, Piyush. Okay, I'm teaching one of them. There are around mostly there are 3 to 4 trading strategies. I am normally as a beginner, I would suggest it is better to go for a breakout strategy. This is a breakout strategy. Pullback strategy is what Piyush is asking. We wait for a pullback. So it will come back to 54 and then you buy. That is one of the strategies. This is another type of strategy. So whichever you are comfortable, you can do it, right? But in this strategy, we are waiting for it to go up. Okay. So he's saying in this condition, we make more losses. No, I have been a breakout trader personally, and I have purchased stocks when they were at 52-week high. Okay, when I purchased that stock, it was on 52-week high. It was on lifetime high. I purchased that stock, and it became 3 times after that. Okay. So I don't agree with you, Piyush, that in this condition we make more losses. No, I'll show you. I'll show you my examples where I made almost 3 times of money, and I purchased exactly at the lifetime high and 52-week high. Okay. So I will show you the example. Okay. After this, just remind me. I'll show you those example where I made money by purchasing like that. So don't worry, you will not lose money doing this, because we have money management. See, it's a package. You cannot trade in isolation. Okay. Okay, so sorry for the deviation. So here we have, but valid question. I'm not saying your question is not valid. I'm saying it is genuine, but this is the answer. Okay, so it has closed. Coming back to the discussion, it has closed above this. I'll remove this cross. So what has happened is this is the moving average. It has gone up. We have entered. Before putting money, we know if it goes down below this, we will exit. Fine. And we are ready. We invested 50,000 in this. Okay, we are good to go. Let's go. Now let's let it go. Okay, so let's play it. Okay, I'll increase the speed. Okay, so when we are going to exit, I'll tell you when we are going to exit, when it is going below this 249 days moving average. So as of now, it is holding above it. I'm okay. I'm happy. Every day I just come and see, okay, is it above or below this 249 days moving average? If it is dancing above it, I don't mind. Even if it is crashing like this, I'm okay. Let it go. It has not closed below the 249 days moving average. So it's dancing around there. We are sitting tight peacefully, no problem. We have to just check whether it is above or below 249. Is it above or below 249 right now? Is the price above or below? Above, na? So we need not worry. If it is going below 249, we will see. Okay, let's increase. I'll increase the speed. Okay, now I'll reduce the speed. Okay, now what we have to do is, see, it has come down. Okay, as soon as it comes down below the 249 days moving average, okay, it has come down here. As soon as it comes down, we don't exit, we wait for it to make a V shape. So it came down here and again went and closed above the 249 days moving average. Fantastic. You should have patience. Here is the critical thing. It will come down here. It has gone up, make a V shape here. So everyone now comfortable with this V shape, what V shape I am talking about? So once it comes down, wait, let it go up. We wait for the V shape to form. Now my exit is below the V shape. Okay. Now again the same principle. What principle was below my before for entering and holding? I'm still having the same principle. It has gone down, went up. Normally what happens is, see, when it comes down, it will within 25 days, 1 month, it will crisscross this moving average for some time. So here is the exit rule one exclusion. Once you form this V shape, after you have entered, see, not before you have entered, after you have entered, you're already holding it. Now, patiently wait at this location for at least 1 month. It is likely to do some whipsaws here. Okay. What do I mean by whipsaw? See, it will go up. Let me increase the speed. Okay. See, again, it went up. Again, it came down. Correct? This is how it is crisscrossing. So you don't have to enter and exit every time it crosses the 249-day line. Just let it go down. V shape is there. You stick to here for 1 month. Let's say approximately 1 month. Okay, let's measure 1 month. Here is the day, and let's say approximately 30 days. Let's take. Okay, 30 bars. Okay, so approximately. Oh, ये क्या हो गया? Okay. Okay, approximately 30 days we'll wait, because once it touches, this is true for 249. Okay, now we are holding our stop loss at 211. We are not exiting. It will whipsaw somewhere here. You still keep on there. Okay, this is little bit gray zone. You might sometimes exit, you might hold on to this thing, but this comes with the practice. You hold on. Once it starts going up again convincingly, then again next time you can shift your stop loss to the latest pivot low. Okay. See, so what is happening is it is forming higher and higher V shape. So you can, once you have this, it has gone. Okay, so see, what we have done is simple technique. First, we understood why we are investing in this share. I explained everyone why I invested in this share, the reason behind it, why I think it will grow in coming 3 years, because the requirement by Indian government and the capacity available by Indian companies, there is a difference of that. This stock was identified earlier. Then we entered somewhere almost, this is the right. So we not only entered at a point here where it was almost 30-40%, let it go off the lifetime high, then it went to lifetime high. Following simple rule, we are holding the stock. It has gone from here to there, 270, like that. Okay, everyone good? Yeah, Reggie, I'll come to you on this. Okay, how many of you are good? Understood this basic principle of entry and like this? How rupees 211 has come? That was the V-shaped stop loss. Okay. So the important point here as a beginner is you should have a entry plan and exit plan. You should have a plan how you are going to hold, because the second problem which comes is to digest the profit. I'll tell you, you will have this dilemma in stock market. Okay, this has become 100%. Should I hold or should I exit? This will be, leave alone 100%. People start getting jittery when they see 10% profit, 15% profit, 20% profit, 30, 40% dekha, and they become impatient, restless. People are not able to digest 40%, leave alone 40%. I have not seen common investors going and able to digest 20% profits also in 1 year. They will exit. 20% ho gaya, niklo, nahi. Don't niklo, don't exit 20%. Make a habit. There are possibilities of 100% also in 1 year. You should have a trading plan like we discussed here. Hold it, let it go, let it run. You have seen it for this thing. And someone asked me for this for long term and short term, right? So whether this system is for long term and short term, did we decide long term and short term? As long as the government's requirement is there, the company is trying to meet the requirement, gap is there, it is making profit, working, okay, then our indicator is also telling now you can call it long term or a short term. It is okay. Everyone okay? So there is nothing called long term and short term. Yes? Okay. Now, this is one part of it. Now we have invested only. Those who are not understood V-shape, I'll come to that V-shape again. Okay, so have patience. Okay, now let's go back to this location only. And then I'll come to answer of again. Now, I'll just remove this and explain the V-shape also. Okay, but still there is a possibility of losing all this, right? So what you have to do is now we are going to put our second indicator, which is again a moving average of, okay, so before I go on this, I'll explain on. So see what happened is, how much money did we invest? Only 5%, correct? Why? We had 10 lakh rupees. We invested only 50,000 in this, because I told in rule very clearly, when it is crossing one indication, you have to invest only 5%. So 5,000 ka 5,000 mil gaya. Correct? But if you are investing only 5,000, you will be for 10 stocks, you will be investing only 50,000, 5 lakhs. Baki 5 lakhs ka kya karenge? Correct. So now you bring in another indicator. So Anand, just have a look. I'll go to indicator. You can have a look at my video, how to use TradingView. You will understand the indicator settings and all. I'll go little fast here. I already shared in the playlist. I'll share in the group as well. So let's bring moving average. Okay, now we have moving average. Let's go to the settings, change the color. Let's make it purple because I have specs. I'll make it little dark. Then let's make it 66 days. Okay. Now, this is our purple is our 66 days. Now I'll just hide the 246. Okay. Now same rule applies. This will give you a little early entry. See what has happened is the price has gone down, 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 down. It started stabilizing and it is starting to go up. It will cross the 66-day moving average. it has crossed here. Once it closes above 66 days moving average, let us cut it here to make it more dramatic. And it has closed above. Okay, time for me to buy. Okay, how much am I going to invest here? If it is gone above my moving average, how much money am I going to invest here? One moving average, 5%. That's it. That is a money management. Per moving average, 5% only. Okay. So it has gone up 5%, 50,000 I invest. Okay. Where will I exit? Okay. So where is the V shape? Okay. This might looks like a U shape, but we'll call it a V shape. If you want to call it a U shape, you call it a U shape also. That is also okay. So just visually see where is the bottom, nearest bottom. It is forming. It is somewhere here. Draw the line here. And okay, so draw the line here. This is the nearest where it has bounced. Okay. Okay. Now this is your entry. This is your exit. You have decided your entry point, you have decided your exit point for loss, and then you go in with this. Okay, you take the trade here. This is your exit in loss. You should be ready to exit in loss. This is stock market. Only thing here is, see, this is sloping downwards. This indicator is sloping downwards. This is little risky. Okay, this average is sloping downwards. You can avoid this or take some risk and take the trade. I would say 5% instead of 5%, you go with 2.5% of your capital, or you can put 5% if you are ready to take the risk. In this case, we were lucky it went up. Sometimes you'll have to face the losses also. So it has gone up. You invest 50,000. This is your stop loss. Okay, good. We are good to go. We have entered the share. Let's say now when we'll exit, when it will go below the 50-day moving average. So let's run it. I have told you the reason why I'm investing in this already. Now it has gone. Okay. Why it is going up is because this is fundamentally good stock. Okay. Okay. It has gone down. Okay. This is the, let's wait for the V shape. Okay. Oh, okay. Went down, went up. Okay. So this is my stop loss. You can as well exit here. No love lost. Okay. If it is coming down, going up, you can exit here. When it is closing here, you can exit. No love lost. First thing is best to have profit in your pocket. Once you start practicing more and more and seeing the charts, you can practice it and exit. Okay. There is no guarantee. Vijay, we are in stock market. We are entering into a jungle. Okay. Vijay, we asked one question. What is the guarantee there is going to be V-shape? The answer is there is no guarantee in stock market. We have to see what repeats more often. Okay. That is one. We have to remember we are entering into jungle. This is a jungle. Stock market is jungle. So you have to follow some discipline, some rules. Unless until you have some rules, you will make some wrong decisions. Okay. So that's why I am giving some rules, some indication, because I have seen it repeating again and again. Fine. This may not be very convincing answer, but this is the answer. Okay. 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 So in case you are having any doubt, if it is going down, just exit. Okay. In case you are in doubt, okay, it has gone down. If you are not comfortable, exit when it goes down, but enter only when it goes up again. Okay. Is that fine, Vijay? You can even exit. Okay. You can even exit when it is going down. Exit kar do, chhod do. Then don't enter. Wait for it to go up again enter. Then again your stop loss is this V shape. Ride the wave. Anyway, you are putting only 5% of your entire capital. It's not that we are putting our entire house and everything. It is okay. So you can wait for a exit. We mark our exit here for this thing, or let's say if we have exited, that is also okay. Again, if it is crossing up, we put this, let it cross above, we enter, and then okay. So this is where it jumped. We are still holding, and see, this is the whipsaw. Okay. Now the problem with moving averages is, and the problem with exit plans in the moving averages, if you only use the crossover means going up and going down, you might enter and exit multiple times here. I'll be covering triangles, consolidation patterns. So once you start learning that, like I said, the day has to come where you should not be using this indicators at all. We'll be covering triangles, consolidation patterns, everything. So you'll understand much better. To start, to give some start, I'm teaching this moving average technique. But in moving averages, this is where people lose money because it is going up and down. It is better to stick to a V shape. After it goes down and goes up, the latest V shape, you stick to that. If it closes below, see, it has gone down below, but it has not closed below this. So you still are in the trade, you stick to this and keep holding till it shoots off, breaks out, and goes in your favor for some time at least. It has shot up again after a few days. If it goes down below 50-day moving average, then either you can exit or wait for a V shape. Okay, so have a look at this video multiple times. I'll upload it on the YouTube. Okay, see, again, it has gone up, gone to this V shape. Just take the stop loss below this and wait for it to close below this. It will have some whipsaws, may go up, may go down. I don't know. Let's see what happens. So it's going, this is called whipsaw, this is called consolidation. After consolidation, it may go down, may go up. Should I increase the speed? Okay, it has come down. This is a V shape. It has gone up. Good. I'm moving my stop loss here. Let's go ahead. Okay, now this is the day when we exit. Okay, so it has gone up, did not make it, it went down below our the stop loss. This is where we exit. So made a decent run. Okay, from here to here. Okay, following rule, we were able to hold for some whatever number of days it is there. Maybe we made some good money. Right? Agreed? Everyone agreed? Yes, no? Okay. Now what happens when you are, it's already up, right? Now let me just, now what we are doing is, we are just following this. Now let me go back to this area again and stress on this. Again, when it crossed this 66-day moving average, we put 5,000. I'll bring 29-day moving average. So what happens is, you should not invest everything in the stock. You should invest step by step. What do I mean? This is very important. Okay. When when the price crossed, now I am putting two indicators together, which is 60 days, 66 days moving average and 249 days moving average. When it crossed, I invested 5,000, which is 5% of my total capital. Okay, so I invest here. Then when the price okay, the price has gone above 249 days moving average, this is where I will invest additional amount of 5%. So I have invested 5% here, I will add 5% more here. Now you will say, yaar, itna kyun time wait kiya? Because sometimes what will happen is, see, there is no guarantee in stock market. We are using indicators which indicate that it is likely to go up. We want the proof of concept that, okay, yes, it is going up. So first we put some amount, okay? Then let it go up. Then it will cross 249. Put some more money. Already we are in profit. हमको दिल को emotionally we are okay, we are stable, we are already seeing some profit, we are happy. Okay, so it's see, whatever you say, if you are seeing your position going into loss, mostly majority of systems will advise you, okay, average out, this is a good stock, long-term stock, average out when it is going down, so you will make more profit. Believe me, that is also true. This is also true. My trading strategy is I buy more when the stock is going up, because that gives me confidence that whatever my analysis was, it is correct, it is going up, no one is fooling me, right? So when it goes up, I invest more. If it is going down, I don't invest, I rather exit with a loss, take that money, put in some good stock. That is my strategy, that's what I'm sharing with you. So it has gone up, we add 5,000. So 5,000, sorry, 5% we have added here, 5% we have added here, total 10% investment we have done. Let it run and then exit. So what you are doing is you are adding, it's like on the race, horse race, you are allowed to put money on the horse which is going ahead. Usually people put money in stock market, unfortunately. If you are going on the racetrack, you'll never put money on the horse which is lagging behind. You would like to rather put money on the horse which is ahead. In stock market, at least you can do that. You put money when you see that, okay, this my horse is going ahead, you put some more money, you put some more money on that, and then you will be able to earn money. So it has already gone up. We are happy already with our this trade. We are already happy. We put some more money and then we have seen it has gone up. Okay. Same is, you can put one more indicator. If you want to put additional 5% on that, put a moving average of 22 days. Same theory we can apply for entry and exit. That you can practice and let me know, and you can ask me the questions the next time. Okay, so same principle here, like another stock which I have is BDL, Bharat Dynamics, again same principle, but because the stocks are, wo kahan gaya bhai? Why it is not showing 249 days? Achha. Oh, listing is, let it come. Okay, so okay, so see, if you know that stock is good, why BDL? Because it is in defense, it is supplying the missiles to Indonesia, Philippines. Government of India has opened the export of defense equipment. That's why it is going up. It has an order book of, it has a 3 times its capacity. The order itself, the orders which it has received itself is 3 times its capacity. So already it has a work of like next 3 years. So that's why this company was good when I selected this, and we can write the trend. As long as it has got business, we'll be in the trend. Mayank, I'll come to that. I'll conduct one session for fundamental analysis purely for that. Okay, so we will go through that. It's a 2-hour session. I'll teach you where to find, how to find. Okay, so coming to Anand's, we need to trail. Yeah, we need to trail, right? So every time it goes down, this moving average, I would prefer to wait for this V shape to form. Once this V shape forms, put your stop loss below this V shape. Okay, this is how you trail. Good, Anand? It has come down, again gone up. This is a V shape. You put your stop loss below that V shape. Fine? Okay. So good. How many of you learned something new today? Can I have yes from all of you if you have learned something interesting and new today? Okay, great, great. Thank you. Thank you so much. It gives me a lot of satisfaction to know that you have learned new things today. It is easy. It is easy to earn in stock market as long as you keep it easy. The moment you make it difficult, stock market will make your life difficult. So keep it simple, easy. It's easy to earn money. Okay, so let's open up for questions. If you have any questions, let me know. Piyush, no, it will not work for intraday. Intraday is a different ball game. You have to use some moving averages will never work for intraday. Okay, so I'll allow you to unmute. Those who want to ask question, please unmute yourself and ask the question. Piyush, I'll be covering some RSI techniques. Those techniques you can try in intraday. That we'll discuss intraday also. We'll discuss in that. Okay.
Sir, hi, sir.
Yeah, hi.
So how do you investigate whether the stock is good or whether it's going to be good over the years? You said you have to go investigate, find out. So
Yeah.
how to work on those things?
Okay, I'll be covering that because that comes under the fundamental analysis part of it, where you investigate what this stock is doing typically. So some tips I can give immediately. One is one tip is, how many of you have heard Nal Se Jal? In 2017, there was a scheme by Government of India called Nal Se Jal. KV unmuted, right? KV asked the question.
Yeah.
Yeah.
Yes,
Do you remember
heard.
that Nal Se Jal scheme in 2017, I think, or 18 it came?
No idea, sir.
Okay.
No
So
idea.
okay, let's start. Okay. So what happened was some 5-6 years, I think 2018, it was there when the government in their budget said that every household in India will get water from tap. Okay.
Okay.
So every household, the government will ensure that they will get the water from the tap. Okay. Now, as an investor, if Government of India is sending water from the tap, for you and me, it should be money from the tap, correct?
Yeah.
Right?
Yeah.
So if water is going to come from the tap, that means what? They cannot send water in the air or by Wi-Fi or by telecom towers, right? They need pipes, they need pumping station, they need water purifiers, they need program, everything. How many companies out of 4,000 companies will be doing this? Hardly 20, correct?
Okay. Yeah.
So government says in budget, okay, I'll be doing this. Whether you like BJP or you don't like BJP, doesn't matter. If government has said they will put some money at least, correct? If they are going to put some money, there are 20 companies which will be going to do it. Okay, fine. Go and see 20 balance sheet, what they are doing. Are they profitable? Let's say WPIL. Okay, so WPIL Limited. Now WPIL Limited, it is a company which does water purification. Okay. They do So we are here in 2018, right? 2017, 18. They do water purification. And they were a good company. Balance sheet was good. They do pumping and sorry, not water purification, pumping systems. So water pumping systems and all
Something.
those systems. Okay. So you have government intent. You have 10, 20 companies. Go see, and you see it went 18 sometime, right?
Yeah.
That's it. Simple, isn't it?
Yeah. Yeah.
BDL company, Government of India changed the policy. Okay, till 1 or 2 years back. See, you can listen to Nitin Gadkari. He said, okay, I am going to mix biofuel. Correct?
Yeah. Yes.
Let him mix biofuel. Let him give me money. Correct? If he's mixing biofuel, someone has to make a biofuel. Correct?
Yes.
How
Yes.
many companies? 5 companies, 10 companies for which make alcohol. In India, 20 companies. No sector is having more than 20 companies. Once Nitin Gadkari says, I'm going to mix alcohol in the this petrol and diesel, 20 companies out of 20 select which are having good 3 years performance. They are making
3
alcohol.
years performance.
Triveni engineering. Correct.
Yeah.
If
Yeah.
government of India is saying I'm going to export weapons, okay, who are making weapons? BDL.
Video. Yeah.
Simple, right?
Yes. Sir.
Very simple, correct? No rocket science. You
Yes.
agree
Yes.
with my all
Yes. Yes.
this thing, right?
Yeah. Yeah. Yeah.
So like that's
Right.
why I said stock market is simple as long as we keep it simple.
Yes. Sir. Yeah.
Okay. So
Okay. Thanks. Sir.
welcome. So we cannot keep automated. It will go. So this is how you find a good stock and then you trade in that. And with systems, you'll be able to have a longer duration run. We will be going through, I'll be taking on some Saturday, I'll take a 2-hour session. I'll be taking you through fundamental analysis, more deeper analysis, whatever I just now said for how to find good stocks. Don't go for news and views. Okay, listen to news and views, but analyze. See, why is very important. You should be convinced. Today, if I'm talking about BDL, Triveni, WPIL, I am having that conviction. If you listen to news and then invest, you will not have that conviction. So listen to news, get the conviction, and then invest, and then you'll be able to earn money. Okay, great. Yeah, something like that. So let's say 10. Okay, so we are already past a lot of 1 hour. Okay, so I hope everyone enjoyed. If you have something is not clear, go through the video. I'll be uploading it on the YouTube. Have a look at it, and if any questions, we will have question answer sessions after 1 or 2 sessions. Some more strategies I'll share, and then we can have a Q&A session together. So thank you so much. Okay, yeah, Anand, go ahead. If you have a question, go ahead.
Sir, I have a question regarding that. Like when we entered, like when it come like V shape, it made a V shape.
Ha,
So at the first step, we put the stop loss,
ha.
considering V bottom.
Hmm.
After entering into it, when the lines go up and up, like our rates will go up,
Ha,
and again come down.
ha.
Because our stop loss is at bottom, so how we can trail, and so can you explain?
So once it comes down, see, for example, let's say we have purchased somewhere in back and it has come down. Okay, so let's say it. Okay, so I'll hide this 249. See, it has come down. Okay, let's say
Right.
I'm a beginner and I'm not able to judge properly. Okay, when to exit. Fine, no problem.
Yes,
है ना?
yes,
अभी see,
yes.
initially when we are learning थोड़ा मोड़ा we will have some challenges in identifying the perfect place. That is okay.
Okay.
Don't worry कि यार did I exit at the perfect location? Don't worry. Okay. If you made
Okay.
money, that is an important thing. Let's say it has come down. Okay, इसको भी
Correct.
हटा देता हूँ मैं.
No, why I'm asking,
No,
sir?
no, I
Yeah,
understood your question. I understood.
yeah.
Don't worry, I understood your question. See, it has come down. ठीक है? Agreed? Here it has come down below the moving average. Correct?
Yes, yes.
it has gone down, it has gone up. Now, for
Yes.
me, for as a beginner, this looks to be a V shape to me. Correct?
Yes.
है ना? ठीक है, ये मेरा V shape है. मैं I'll put a stop loss here. I purchased here. When I entered my stop loss, I entered here. Let's say this is my V shape here. My first stop loss was here. Correct? है ना?
Yes.
Now it has gone up. It has gone below the 66-day moving average. My new V shape is here. Correct?
Yes. Correct.
I will exit if it closes below. Okay. Now,
Yes.
1 day
Got
later,
it. Got it.
see, wait.
Got it.
है ना? Wait. So now it has gone down here. I saw, see, abhi it has closed below this line. Agreed?
Yes.
Don't even think exit. अभी अपने को profit
Yes.
तो हो गया ना?
Got it.
Again,
क्योंकि
wait. Don't go. Just don't shut. Very important thing after this. Now, what will happen is
Okay.
you will see. Okay. Now here again it has crossed up. Correct?
Yes.
है ना?
Yes.
अभी you will feel something bad in your heart कि अरे यार I got exited. थोड़ा सा ये अगर if I would have identified this V shape properly, I would be still holding this share. Now I have to buy it here again. Okay?
Correct. Yes.
आएगा, आपके मन में आएगा. You will think, you will repent, you will feel sad, you will try to make it more accurate. Don't feel anything like that. First thing, you made profit, first class. You were not able to identify properly. No problem. हम फिर enter करेंगे, फिर कमाएंगे पैसा. उसमें क्या दिक्कत है? Correct?
Right.
So exit is important, but after exit, if you see it going up again, don't be regretful. Okay, that is the biggest poison for a trader. That if he sees again the price going in his direction, enter again. Usme kya hai? Be humble. Okay, if it has not, I exited fine. I exited with profit. If it is going in my direction, I enter again. I will again make some profit. This is very important. Okay. So V shape, exiting wrong, okay, with experience you will get more. Best is don't regret.
No problem. Thanks.
Yeah, you should refer. So Amit is asking what about piercing pattern? This indication is for people who are learning new, right? I said finally you should not seeing any indicator. That is the best part. If you are having piercing patterns, only candlestick patterns are good enough to trade. But as a beginner, we need some indicators, so we are using this. But ultimately, you should be going more. Like we learned, right? Lower wicks are forming here. We can use that.
So, but this engulfing and piercing pattern are very short in nature. Like moving average is very long term.
See, this we will be learning this consolidation patterns also. So once you see this consolidation pattern, you will know, okay, it is consolidating here. So you will wait for it to break out here. So you will be like, we will cover that also. Consolidation patterns also, which will be for a duration of longer time.
Okay.
Yeah. Okay, great. So thank you so much. Thank you, everyone. I hope everyone enjoyed. See you next Wednesday. You can have a relook at this video once again. You can send me a WhatsApp. Someone said add me to the group. Okay, Piyush, you can just send me the WhatsApp message. This is my number, mobile number. Send me WhatsApp message on this. I will send you the, this is my mobile number. So I'll send you the link to join the WhatsApp group. You can get added into that. Okay, great. So thank you so much. Thanks a lot for joining. See you next Wednesday.
Thank you, Samir.
Thank you.